Hello and welcome. You're watching Focus On with me, Kiamogetse Mosepele. The African Growth Opportunity Act gives 35 eligible African countries duty-free access to U.S. markets. Now, Africa's biggest lender, Standard Bank, is a key sponsor of the AGOA Business Forum hosted at Nasrec in Johannesburg. Today, we speak to two Standard Bank CEOs about how Africa can leverage better trade outcomes with the world's biggest economy, the U.S. Joining me now is Bill Blackie. He is the Chief Executive Officer for Commercial and Business Banking at Standard Bank. Thank you, Bill.
Kiama, thank you. Wonderful to be with you and your viewers today. Thank you.
So, firstly, why did Standard Bank decide to participate in AGOA?
Yeah, so this is really important. AGOA gives access to small businesses, ultimately to the big US markets. And so it's very, very important to be supporting these types of initiatives, these trade initiatives between the big markets and Africa.
Now, how can US-Africa relations improve, particularly looking to the renewal status, which is set to expire September 2025?
So I think these things are all about success. These take a huge amount of effort to put in place, to develop, to construct, to manage stakeholders in the background. And so if these policyholders don't see the success of their actions, then they're not going to continue with it. They're not going to continue to support it. So what's really important is we show the success that our businesses are benefiting from in these programs.
Now, how can AGOA improve regional value chains in Africa through trade agreements such as the AfCFTA?
Yeah, so AGOA and AfCFTA are two very different agreements. So AGOA is obviously signed between African countries and the US, while AfCFTA is an inter-African country set of agreements. The benefit of AfCFTA, or the vision of AfCFTA, is that it should allow African countries to start to build scale and to work together to build value chains. So allow, in the old Adam Smith world, to allow those who are really good at some things to specialize in them, and other people who are good at other things to specialize in those. But start to build markets of scale that can then ultimately be transferred into the US.
So you mentioned scaling within both of these agreements. Can you just give a brief overview of the African macro environment?
The African macro is actually, we at Standard Bank think is very positive. We see sustained growth across the African macro as a whole. If you look at our own businesses, which of course are just a vector for what's happening in the markets themselves, we continue to see sustained growth, good growth in Africa as a whole. And so we remain bullish on Africa and we continue to invest in the African continent.
Now, as Africa's biggest lender with a footprint in 20 countries, can you just share some of your sustainability goals and how you guys have paced yourself within that space to protect Africa within the move to the just energy transition?
Yeah, so we've taken this very seriously. We're deeply engaged in, as you described, the just energy transition. We've made some very firm commitments to both ourselves as an organization and external stakeholders as to what we're going to do. And some of those are really big numbers. So we've committed to 250 billion rand of sustainable financing over the next couple of years. These are very significant investments and they're very real for Africa in the sense that you can then move the African continent off its dependency on biofuels and fossil fuels into the new economy of energy.
Now, moving back to your role as the CEO of Business and Commercial Banking, can you just share some of Standard Bank's success stories in driving trade in Africa?
Yeah, absolutely. When you look at trade in Africa, you have to look at those sort of regional successes. So the motor vehicle industry in the Eastern Cape would be a classic case of that. The garment industry in Eswatini would be another case of that. Actually citrus in the Western Cape would be another example of that. If you look further afield from us here in South Africa to Kenya, Kenya is all about agricultural production and getting agricultural production into the big US markets. Similarly from West Africa at the moment is more dominated by the transport of oil and oil extraction to the US. But there's a lot of potential for other industries to develop in West Africa. So that's what we're really trying to support. That's what you want to see, is you want to see local industry developing on the continent.
So you've mapped out a number of exports, but drawing back to South Africa, I know AGOA plays a key role in driving economic change and growth. How can export values in South Africa increase, but as well as the greater context of Africa?
So one of the real benefits of South Africa, or strengths of South Africa, is it's got a very significant industrial base. So if you've got that industrial base and you can sell into the US market on a tariff-free and a tax-free basis, that gives you incredible competitive advantage. And that's what our customers tell us, is that why do they like AGOA? It's because it gives them access to that market. So they can use their relatively low cost of production here in South Africa and then transport these goods to the US and sell them into the US market.
Thank you so much. That was Bill Blackie. He is the Chief Executive Officer of Business and Commercial Banking at Standard Bank. I have just been joined by Philip Myberg. He is the Head of Trade for Business and Commercial Banking at Standard Bank. Philip, thank you so much for joining us.
Thanks for having me, Kiamo.
What can exhibitors and other people interested in the AGOA Forum expect to see, and some of the dominating themes that will run through the discussions today?
But so far, it's been quite clear that some themes are dominating the discussions. One of the key ones that I've picked up is the fact that there's a strong connection being shaped between AFCFTA and AGOA. How can we leverage AFCFTA and the ambitions thereof to remove trade and tariff and non-tariff barriers to establish more regional value chains in the continent, to create that much needed capacity on the continent to be able to export to the US? That certainly has been a big theme so far. And then the other one is we see a big opportunity in the agricultural sector. So there's a lot of conversation about how do we expand the capacity of the agricultural sector across Africa to make it a more attractive environment to export to the US.
So you emphasize quite considerably intra-African trade or strengthening regional value chains. As you know, there's AGOA, there's AFCFTA, there's a number of forums coming together to increase trade in Africa. My first question is, what are some of the barriers that stand as a hindrance to Africa increasing trade within itself, and as well as a private sector player? What are some of the challenges that you face in this space that hinder, or between navigating all these forums, that also hinder you as well?
Yes, I think there's obviously a big opportunity, but sometimes we're struggling, clients that we talk to are struggling to access that opportunity. And it stems from various factors. Some of them are within their control and some of them are not within their control. The ones that are not within their control are typically the things that the AFCFTA is also trying to solve. There's lots of tariff barriers in terms of movements of goods and services and people across the continent. And there's non-tariff barriers, things like infrastructure playing a key role in moving goods across the continent. Why is this important when we talk about moving of goods across the continent in the context of the US? Well, we know that industrial capacity is often not very mature in many of these markets. So we need regional value chains to happen. So to be able to meet that capacity and that increased demand, to be able to access and leverage the strong demand coming from the US.
Now, speaking to the history of AGOA, it was instituted in 2000. Now, looking forward to September 2025 when it is set to expire, what do you say to African countries? Do you feel they're adequately leveraging their opportunity in terms of the strengthening of bilateral trade ties between the US and Africa?
I think some countries are really doing well in leveraging AGOA. You have a country like Kenya as an example that are doing quite well, and then you have a mixed bag of other countries perhaps not doing so well. Some of the factors influencing that is the fact that some countries are making a concerted effort to share with their businesses and various sectors the opportunities and the benefits of AGOA, how to access the US market, who do you talk to, where do you go, whereas other markets haven't necessarily done that. So we can look towards the US to make changes towards what AGOA is. Should it be 10 years cycles? Should it be permanent? But I think on the African continent ourselves, we can do more within our control to influence and leverage the opportunities that AGOA does provide us with.
Now, speaking to some of the benefits such as job creation, economic industrialization, just speaking on the role that AGOA plays within bolstering African economies, what can be done to further improve this going forward as we seek renewal in 2025?
Yeah, it's an important point. One of the things that I'm particularly favorable on towards AGOA is that there's such a strong emphasis on value-added goods. And that really talks to Africa's drive towards driving industrialization, putting factories into place, adding value to goods and services, because that's truly where jobs are created. For that, we need capacity. We need regional value chains to happen. But importantly is we need certainty, we need predictability. That's what investors are looking after. You can't ask investors to put big money into creating factories and industrialized investment if there's not some sense of horizon of 10 years or longer to ensure that there's access to market for some of these products that they're investing in.
Now, as Africa's biggest lender with presence in 20 countries, what do you say to some critics of the AGOA Forum who say that the AGOA exports or the African beneficiaries of the US AGOA agreement should diversify their exports? As you know, textile industry has done really well, but others are proposing other sectors. What does Standard Bank say about this?
I think if you look at the diversity of products that AGOA covers, I think we haven't done enough in leveraging it. Yes, there's been some sectors that have really benefited from it, like the automotive sectors, certain components of the agricultural sector, like citrus, as an example, textile industry is another example across the continent, but there's so much more. So I think it's up to us to really make sure that we build that capacity, create that capability in those other sectors, put those policies in place by the respective governments to meet that demand. And then ultimately, it's less about picking AGOA or not. It's more about having that optionality as investors, having that optionality as exporters, to be able to play these different markets off against each other to ultimately grow the economic basis of these markets in which these businesses operate.
Playing different markets against each other. I think that's a great insight into the AGOA Business Forum. Thank you so much, Philip. That was Philip Myberg. He is the head of trade for business and commercial banking at Standard Bank. And that's how we wrap up today's discussion at the AGOA Business Forum with Standard Bank, hosted at Nasrec Johannesburg. From myself, Kyamkhetsa Mosipili, it's goodbye for now.